Hello and welcome to DMBFX Trading Tutorial. Today we're going to talk a bit about different strategies that can help make your trading smarter. We're first of all going to look at different aspects of the strategy that can basically help you make better decisions about your trading and thereby also maximizing your profit. So the template that we're going to look at today basically contains 4 basic conditions or principles, as you can call them. And they're basically put in there not only to minimize the risk while you're trading, but also to give you a better setup when you're trading. So to start off with, let's look a bit closer at the conditions that we have here. Now, as you can see in the chart, we obviously have some levels here. You have the green levels down here, and then you obviously have the red levels up here. Now what this basically means is that the green levels down here are the so-called buy zones, and you obviously have 3 zones, and vice versa in the sell zones you obviously have 3 levels as well. Now the levels can basically be called buy zone 1, buy zone 2, and then you have the buy zone 3 as well, and vice versa in the sell zone you obviously have level 1, the sell zone 1, 2, and 3. Now what this basically means is that whenever the price would, for an example, hit down here, it would actually give you an opportunity to buy in this template. And vice versa, for an example, if the price would go up here in one of these levels, it would actually give you an opportunity to sell. So you have buy zone here, and then you have the sell zone up here. And obviously there's a reason why you have the buy zone 1, 2, and 3, the 3 levels. And the more deep it actually goes, the more probability of a successful trade you would actually have. So if the price would actually go down here, then that would actually be an extreme buy zone, okay? And vice versa, if the price would actually be up here in the sell zone 1, then that will basically give you good circumstances for a sell, okay? So that's pretty much the first condition that we have, okay? So keeping in mind that, you have the sell zones up here, and then you obviously have the buy zones up down here. And in between, as you can see here, we have something called the neutral zone, okay? Within the blue line. And we would never actually go into trade in the neutral zone because it would actually be a bit too risky. So we would only trade whenever we're in the buy zones or in the sell zones. So obviously the best opportunity to do a buy or a sell would be in buy zone 1 or the sell zone 1. Okay, so that's a bit about the first condition. Now moving on, we have something called the buyers and sellers down here, as you can see. And what this condition basically means is that whenever the indicator would go up here, for an example, to this level, you would actually get an opportunity to sell. So it's pretty much tied into the first condition that we have. We had the levels, the sell levels up here, and then we have the buy levels up here. And it's pretty much like the first one. If the indicator would actually go up here, then it would actually give you an opportunity to sell. And vice versa, if the indicator would go down here to the buy zone, then it would actually give you an opportunity to buy, okay? So you have the oversold territory down here, and then you have the overbought territory down here. And much like the first condition, you obviously have the neutral zone in between as well. So we wouldn't actually trade in the neutral zone. We would just stay calm basically. So that's a bit about the second condition that we have, and as you can see, it's obviously tied into the first condition as well. Now, if we look a bit closer at the third condition that we have, the third condition is also tied into the buyers and sellers. And what this would actually mean is that the buyers here would actually have to be on top of the sellers, or the sellers would actually have to be on top of the buyers before making a trade. Now, if you can see here, you obviously have the green line here. That's the so-called buy line. Okay, so that's the buyers, and the red line here is obviously the sellers. So let's say we would, for an example, do a buy trade. The green line would actually have to be on top of the red line, the sell line, and vice versa. If we were up here and doing a sell trade, the red line would actually have to be on top of the green line and going down before we could actually make a trade. Okay, so it's kind of tied up into the two previous conditions as well, as you can see. Now, if we move on to the fourth condition and the final condition, the fourth and final condition is basically that the last candle, as you can see here, would actually have to be green, for an example, if we're gonna do a buy. Okay, so let's say the price would be down here and we wanted to go long, we wanted to buy. The last candle here, as you can see, would actually have to be a green one before making a trade. Okay, and vice versa. If the price was up here, for an example, and we wanted to go short, we wanted to sell, the last candle would actually have to be red and moving down before we can actually trade it. Okay, so that's pretty much about the four conditions that we have in this particular strategy. As you can see, they're very, very good in terms of that they can minimize the risk while you're trading, and obviously also maximize your profit, which is obviously the ambition for every trader. If you have any more questions regarding this strategy or about trading, please do not hesitate to check us out on www.dmbfx.com. Thank you very much for watching.